Hello and welcome to another update video about Doge. The Doge chart is deep in support and it's really due a bounce from this region. I mean, essentially in the last few days and weeks, the price has followed the projection here to the downside. We have, after this triangle broke to the downside, which was suggestive of trend continuation to the downside, we've seen that one more low and we are now not only in the support region, we are also in the target region. These are slightly different. The general support region is just a Fibonacci retracement zone highlighted here between 11 cents and 14 cents, between the 61.8 retracement level and the 38.2 retracement level, with the 50% Fib level in between. And then we have additional Fibonacci extension levels here, which are calculated based on the internal projections of this correction. And we can calculate these by taking the length of the A wave, and then we go to the length of we compare that with the length of the C wave. And oftentimes a C wave covers the range between the 100% extension of the A wave, which is both have the same length, and the 138 extension, maybe even a little lower, but then we would go below the overall support area anyway, which wouldn't be ideal, but I cannot rule that out given that Bitcoin is ideally going to form another low. So I cannot rule out another low here on the Doge chart. We're going to zoom in a minute, but I want to share with you, this is technically, especially if we zoom out, this is a completed wave count to the downside. Again, on the micro level, I can make the case for another low, but broadly speaking, we are now in the area where a bounce is due. And now let's zoom in. Or before we do that, next upside level in wave 5, I'd like to see the price get to 26 cents at least. Okay, so it would be a 2x just for this next move up. Could always go higher, but let's first see if we can form a low in this region. Now, if we go to the 1 hour time frame, here you can see the more detailed wave structure. Again, it is difficult to say where exactly this correction ended this wave 4. All right. So I can definitely make that. So for me, this is a triangle. Okay, I mentioned that before, like a triangle pattern. And this also shows you why micro counting is not so helpful, because there are just too many potentials. I mean, I can make a case that the E wave finished here. That was on the 25th of April. But I can also make a case that it finished here. And that gives me a different micro count for the decline. So I can essentially put it where I want it. I could even make the case that it finished here, but then this D wave looks a bit strange. I think this one would actually be a decent, this would be a decent interpretation, gives us a healthy D wave, also in 3 waves as it seems. Could actually be rather a 5-wave move, therefore I think I had it here. But that, again, that is a bit unclear. That's the problem with, that gives you a lot of different possibilities, that micro counting, especially when you are dealing with a potential Elliott wave triangle that completed. For me, it's like if we now break above the last swing high, however, that would be a solid indication that a low has formed. That is a break above 14.6 cents. And again, a bounce is due. Not only a bounce, actually a reversal is due from the current region. But if we, if we count really the micro, and I will take it off the chart again, but we could say, okay, maybe this was a wave 1 of 5. Maybe this was a wave 2 of 5. Maybe this was a wave 3 of 5, a wave 4, and then we should ideally get one more low. But then that takes us to the structure of the decline. And you can see that I'm counting this decline as an ending diagonal. So the wave 3, for example, was an ABC, the wave 1 as well, even though I'm not showing that. So the wave 5 should be an ABC structure as well. So, okay, so that means we don't count 5 waves, we only need 3. Well, guess what? We have an A, a B, and a C. But then it depends on where I put the end of the wave 4. So if I put the end of the wave 4 here, it's not that clear. But I think I can make a case for a completed structure. The thing is, there is nobody with a bell who's saying, okay, the low is in now. One more low cannot be ruled out at this stage. We need some kind of a break above resistance for an indication that the low is in. And then the market needs to hold a higher low as well. But yeah, I think I mentioned those levels to you. So if we now see a break above that 14.6 cent level, yeah, pay attention to that next resistance there. And then above that, we've got 15.2 cents. And then a very relevant top there around 16.5 cents as well. These are all levels of confirmation. And then essentially because this looks a bit like a descending broadening wedge. A break to the upside of the wedge pattern should send us first to the beginning of the wedge, which is up there around 23 cents. That's my update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.